we're in a market where clearly there have been significant changes in the way the market is reacting, the way clients are looking at multifamily assets, the way they are managing their properties, operating them, et cetera. So we're going to get into those. And I'd like to start first with Karine. Karine, rent regulation is a form of price fixing. And as someone with advanced degrees in economics, we've spoken about this a lot. Could you share with the audience some of the impacts that rent regulation reform will have on the market moving forward and how price fixing impacts macroeconomics?
Sure. So, at the macro level, with prices where they are in New York, the only solution that would really fix the issue without regulatory intervention would be an increase in supply. And with the new reform, in the long term, it's likely to actually reduce supply. And anytime we have a price ceiling, any kind of price ceiling, it's going to lead to shortages in the market. Once price comes down, quantity demanded goes up, and there's going to be less developers that want to build, less investors that want to buy, and eventually capital is going to flow out of New York. And I work for a broker in New Jersey, and we're already seeing those effects of capital flowing out of New York into New Jersey. And not only on the capital side, but also the renters. When price comes down, we also have a concern with maintenance of the buildings. And now there's going to be a higher product quality elsewhere. So if product quality decreases in New York, people are going to be looking to move. And that's going to create more shortages in the market and less supply. Even in theory, a low supply could lead to an increase in discrimination, because if it's a free market, a landlord could discriminate, but there would be a cost associated with that. His apartment would sit vacant for a longer amount of time. But now that prices come down and there's so much demand for these apartments, in theory, he could discriminate and he wouldn't suffer as much of a cost. So there are even social aspects of the reform that haven't really been considered or studied yet.
Fascinating. Sherwin, and I want to thank you very much. Over the years, you've been so helpful to me with advice and trying to understand this labyrinth of landlord-tenant issues. So thank you very much for that. How has, over the past few months, what has changed with respect to the way clients are interacting with you? What are they asking you to do, what not to do? What are the most frequently asked questions? How has life changed as one of the top landlord-tenant attorneys in New York City? How has your day-to-day changed based on this new rent reform?
The day-to-day has changed. The Housing Stability Act that was passed last June is incredibly complex. It really changes the rules of the game. Many owners who want to comply with the rules are having a very difficult time doing so. The rules often make sense or are a disincentive to investment. So one of the questions that comes up constantly is, I have a tenant that just vacated an apartment. Tenant was in that apartment for 30 years. I just want to get the apartment ready to rent. What can I do? And I explain, the most you're allowed to put into the apartment is $15,000 if it's stabilized. The most you can put into the apartment is $15,000, and the grand total rent increase you're going to get is $83.33. That's it. And it comes off in 30 years. 30 years from now, it'll go away. That's not feasible. So you're starting to see on long-term, deeply stabilized apartments, some owners beginning to leave apartments vacant because it just makes no sense. They can't put the money in and get it out. You're starting to see some owners doing reconfiguration of apartments, changing the footprint to get a first rent. It's going to be stabilized thereafter, but it's one of the few opportunities to spike the rent higher. And the constant question is what's happening in the next session. That's the constant question. And my answer is my crystal ball is incredibly cracked. But you read the tenant activist list, it's good cause eviction, which is another name for universal rent control, reconfiguration of apartments, trying to put some cap on that. So even the small opportunities for rent increase, the tenant activists are looking in the next legislative session to possibly put constraints on. It's just been an incredibly difficult environment. The other thing is to see owners who applied, spent the money on capital improvements in their building prior to June 14th, file MCI applications prior to June 14th, and then have those applications rejected because there were less than 35% stabilized units, so they get no increase. That's been very difficult to talk to clients about, to explain you expended the monies based on the law in effect, based upon an investment that you thought you were going to pull out, and it's just gone. That's a very difficult conversation. It's also a very difficult conversation to talk with owners who are in the middle of owner occupancy cases, recovering the apartments for themselves and their family. They've expended enormous amounts of money to acquire a townhouse so that it could have a single home for themselves and their family. To explain to them, you don't meet the new standard of compelling necessity, and you're also limited to one apartment. So all of the monies you spent buying the apartment to create a family home, your dream's gone. Those are just very, very difficult conversations.
Okay, one of the not so bright spots that I didn't mention was that one of the most troubling things for me as someone who loves New York as much as I do and want to see the market do well and everybody excited and enthusiastic to participate in our market is that increasingly I'm seeing investors that for decades have only purchased property in New York City, buying properties outside New York. It seems like every week a client is calling up and saying, hey, Bob, I'm buying a building in Nashville or Tallahassee or Austin. The brokers don't know me down there. Could you call them and tell them who I am? And these are people with significant net worths that I never would imagine they would have bought anything outside New York. And increasingly, they're looking to deploy capital outside New York. It seems like 2 or 3 times a month we're meeting with a family that built their own portfolio, that are thinking about selling the entire portfolio and deploying the capital outside New York. But we still have folks who are optimistic about New York City and are still buying here and buying multifamily. And Douglas, you're one of those folks. Could you share with us your perspective on the market? You're actively looking to invest. Why now in the face of rent regulation reform? Why do you think it's a compelling thing, and why are you so optimistic about the market?
Sure. I mean, I think the basic premise is I'm a believer in New York in the long term. The city has weathered all sorts of storms. This is certainly one of them. Everyone in this room obviously has been hurt in a detrimental way by these regulations, but I don't believe that they're here to stay. I think that there are tremendous unintentional consequences that have or the result of the regulations, and those unintended consequences need to be fixed because otherwise the city won't have what it desperately needs, which is an answer to affordability, an answer to income inequality. And I think as you mentioned, the city at some point needs to build its way out of it. And so, hurting the rent stabilized housing stock is not the answer. And when politicians eventually realize that capital's not going into buildings, when capital's not going into apartments, that we're not creating good quality apartments for people to live in, I imagine that there'll be some type of correction. But I think long term, and you mentioned this, when you travel around the world, capital wants to be here. When you travel around the world, people want to be here. So I'm a believer long term in New York City. And I think, I'm happy to go visit Florida and California and Tennessee and all these wonderful places, but this is a place where I want to invest.
I think that's great. It's great to see that optimism, and I want to stop getting calls from people saying, call the brokers in another state and tell them who I am. So Susie, Karen mentioned that one of the impacts on the marketplace is supply, and that if owners are not re-renting stabilized units, they're just leaving them vacant. That's constricting the supply. So the market looks to developers to increase supply by building new buildings. How has rent regulation reform impacted your perspective on the market, on developing opportunities? How have things changed over the last few months based on these changes?
So I think the biggest impact is really we're looking at deals where we need to make sure that our first rent is above the deregulation threshold. So when you look at markets like Queens, Brooklyn, core areas of Brooklyn, and definitely Manhattan, those are the areas where you can achieve that. I do think new developments that have free, unregulated market units will actually trade at a higher value once those units are developed and brought to market versus the pre-regulation 80-20 component. So we're optimistic because we're developers, but I do think we are, as developers, there's a lot of migration to Jersey because, Jersey waterfront is a little bit of our sixth borough, so we're definitely looking at those areas as well as places develop where the headwinds politically is coming but is not quite there yet.
Right, and one thing I have always found interesting about New Jersey is that every town has its own form of rent regulation, so it varies town to town. With respect to the unit mix in your building, Susie, you mentioned that you need to get your first rent above a certain threshold. Normally, developers would look at a marketplace and say, this neighborhood needs more studios and ones, or maybe it needs more 3- and 4-bedroom apartments. Is economics and the realities of what you need to build to get over a certain threshold impacting the unit mix that you're looking at in the buildings you're building?
I think that happens whether the deregulation rent is impacted or not, because the reality of it is that your yield is always much higher on the smaller units, not so much on the larger units. And you build the larger units to create a much more sustainable development ultimately, because you don't want your tenants to churn so much. But I think it's sort of the absolute dollars where maybe on the fringes of Queens, Long Island City, and even Brooklyn, maybe you'll do a little bit bigger 1-bedroom versus a smaller studio. So your unit mix changes so that tenants are incredibly sensitive to $100 a month in rent when they're stretching a bit to rent the apartment. So if you get a little bit more and you change the finishes a little bit, maybe you can get to the deregulation threshold easier. So I think that sort of calculus is there now.